Loan-to-value is the key factor which determines if a lender will consider funding a loan secured by investment real estate. Many people use the term incorrectly, which causes confusion and leads to a lot of time wasted when you're seeking private financing. In this video, I'll clarify the term loan-to-value with various loan scenarios. I'll provide the typical loan-to-value for various deal types, and I'll give you my suggestions for the proper terminology you should use when you're requesting a loan from private lending companies, which are also known as bridge lenders or hard money lenders. I'm Butani, founder of PrivateLenderLink.com, where investors and brokers can easily find direct private lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. The maximum loan-to-value, or LTV for short, is one of the most important guidelines to look for when seeking a private mortgage, especially when you want the highest possible leverage. It determines how much equity the borrower needs to have in order to qualify for the loan. The confusion with the term sometimes comes from the lender advertising their max LTV, but if you're the one seeking financing, it's on you to be clear about the requested loan amount and loan-to-value. In many cases, the lender will ask you what the loan-to-value is, and the key to avoiding any confusion is to be very specific. I recommend that you only use the term loan-to-value when referring to the as-is value. There are other terms that you can use to be specific for various deal types, including a purchase, junior lien, rehab, value-add, and ground-up construction. Let's start with a purchase transaction. When you're requesting a loan to acquire real estate that does not include any rehab or value-add, don't even use the term loan-to-value. Be more specific by using the term loan-to-purchase price, or LTP for short. Most lenders won't care if you feel you're purchasing below market value. They'll consider the purchase price as a value. The deal type which causes the most confusion is a property rehab. Many real estate investors use the term loan-to-value when referring to the value after the rehab is complete. To avoid any confusion, use the term loan-to-after-repair value, or LTARV for short. There are two other leverage ratios involved in rehab deals: loan-to-cost and loan-to-purchase price. The loan-to-cost, or LTC for short, is the amount of the rehab cost that the lender will fund. We already covered loan-to-purchase, but if the property has already been purchased prior to seeking a rehab loan, then use the term LTV to state the property's as-is value. In commercial real estate finance, rehab projects are commonly referred to as value-add deals, but the added value may not include any renovations. It could just be leasing some vacant spaces, which then increases the value of the property. If this applies to your deal, use the term LTV after lease-up to state the future value. Ground-up construction loans have a similar terminology to rehab loans, but instead of after-repair value, use the term loan-to-completed value, or LTCV for short. The loan-to-purchase price is for the land acquisition, and the LTC is for the construction budget. Use the term loan-to-value only for the land value if the land is already owned prior to seeking a construction loan. The cleanest use of the term loan-to-value is when the loan request is for a first mortgage refinance and there is no rehab or value-add involved. It's implied that your requested loan amount is based on the as-is value. If you're seeking a second mortgage or a third mortgage, use the term combined loan-to-value, or CLTV. It's the amount of the first mortgage balance plus the second mortgage amount requested divided by the as-is value. You must include the first mortgage balance. Stating the LTV only with the junior lien amount would be useless to a lender. In private lending, the maximum leverage varies by lender and it fluctuates based on market conditions, but in general, the majority of lenders max out at 70% loan-to-value. For a standard purchase or refinance, you typically need 30% equity. If your refinance includes any cash out, most lenders are more conservative and max out at 65% LTV. For residential rehab deals, most lenders max out at 85% LTP, 100% LTC, and 70% LTARV. Ground-up construction is more conservative: 50% LTP, 75% LTC, and 65% LTCV. For long-term rental loans, the max LTV is 75%, and it may be lower depending on the debt service coverage ratio. Now, these are just average numbers. Some lenders are a bit more aggressive, and all lenders will become more conservative when there is uncertainty in the market. This video was produced in June 2022, at a time of major volatility in the private lending space caused by rising interest rates. Many lenders anticipate that property values will decrease over the next 12 months, which means their maximum leverage will be a lot more conservative until the market stabilizes. If you use our platform to seek private financing, you'll find that every lender has a very detailed profile, which includes their maximum leverage for various deal types. Most lenders are pretty good about keeping this updated, so use us as a resource to figure out the maximum leverage as the market changes. Visit privatelenderlink.com and click Browse Lenders from the main menu. Select a loan type and enter a state or major metropolitan city. View each lender's profile and you'll see their maximum leverage close to the top. Scroll down to view other lending guidelines, then click the green contact button to find their phone number and a form to send an email. To make your search more efficient, click the Create a Loan Request button to provide information about your financing needs, then invite lenders to view it. If you'd like our assistance, we can review your loan request and invite a few select lenders that we feel may be a good fit. Any lenders interested in funding your loan will reach out to you and you'd work with them directly. If you found the content in this video to be useful, please click the like button and be sure to check out our other videos about private mortgage lending. Thank you for watching and see you in the next video.